Good morning, investors. Today, August 26, 2025, the U.S. stock market is navigating a challenging macroeconomic environment that points to a distinctly bearish outlook. Global sentiment is cautious, primarily driven by accelerating inflation and clear signs of economic contraction. We've seen CPI, PPI, and core PCE all tick higher, signaling persistent inflationary pressures. Simultaneously, the GDP growth rate dramatically reversed from a positive 2.4% to a negative 0.5%, indicating a significant recessionary risk. Both manufacturing and services PMIs are weakening, and while non-farm payrolls showed some strength, the unemployment rate also edged up. This complex situation of persistent inflation, coupled with contracting GDP, often termed stagflation, severely limits the Federal Reserve's policy flexibility, even as they held rates steady today. This divergence between short-term market movements and underlying economic weakness necessitates careful risk management. For the broader market, holding key support levels is paramount to prevent further declines, with significant resistance looming overhead. The S&P 500 index is currently staging a modest intraday rebound, closing up plus 0.27% at 6,465.95 after recent weakness. The price is trading above its 20-period simple moving average, indicating some short-term strength, but significant overhead resistance around the 6,500 to 6,507 area remains. Technical indicators like MACD show a positive turn, and RSI is at a healthy 59.12, suggesting room for movement. However, stochastics are deep in the overbought zone at 90.42/79.11 and appear to be turning down, indicating the bounce might be stretched. Volume is decent today, accompanying this upward move. Given the broader bearish economic data, particularly the contracting GDP and persistent inflation, this rebound should be viewed cautiously as a technical correction within a challenging macro environment. The Dow Jones Industrial Average is also experiencing a modest intraday bounce today, attempting to recover from recent lows. This recovery appears technical in nature, occurring amidst a backdrop of bearish economic data, including a contraction in GDP and rising inflation. The daily chart indicates that the Dow is likely encountering significant resistance at its overhead supply zones. While there's a short-term upward movement, the overall momentum remains subdued, and conviction behind this bounce appears limited. Volume during this rebound seems to be on the lower side, which suggests that the move may not be sustainable in the face of ongoing economic pressures. Investors should remain cautious, as fundamental headwinds are substantial. A sustained rally would require a significant shift in the macroeconomic landscape, coupled with a decisive break above key resistance levels on strong volume. The Nasdaq Composite, heavily weighted towards technology and growth stocks, is also registering a modest intraday gain today, up plus 0.24%. at 21,543.75. While the tech-heavy index might show some pockets of strength or sector rotation, it remains highly sensitive to the broader economic narrative of contracting GDP and persistent inflation, which typically weigh heavily on growth valuations. The chart indicates that the Nasdaq is likely confronting overhead resistance, and the current upward movement appears more like a technical rebound rather than a strong, conviction-driven rally. Volume looks average, which is not strongly supportive. RSI is at 56.54 and MACD is positive, while stochastics are in overbought territory at 85.55/76.59. Given the challenging economic environment, investors should exercise caution as the gains could be fragile. Key support levels need to hold to prevent further declines, while significant resistance looms above, potentially limiting upside for the foreseeable future. Turning our attention to market sentiment, the VIX, or the Fear Index, is showing a slight easing today, down 1.63% at 19.96. While this intraday dip suggests a minor reduction in immediate market anxiety, it's important to note that the VIX remains elevated, hovering near the 20 level. This indicates that despite today's slight pullback, underlying uncertainty and investor nervousness persist due to the challenging macroeconomic environment we discussed earlier. Technicals show the VIX trading near its middle Bollinger Band, with RSI around 52 and stochastics trending down from previously overbought levels. However, as long as the VIX stays above its historical comfort zone, investors should maintain a cautious stance, as significant downside risks likely remain in the market.
Now let's zoom in on American Superconductor, ticker AMSC. On its 4-hour chart, AMSC is currently trading at 52.26, up 1.55% today. The stock appears to be in a consolidation phase after a significant downtrend earlier in August. The price is currently positioned between the middle and upper Bollinger Bands, with the bands themselves narrowing, suggesting a period of reduced volatility before a potential future move. We're seeing a bullish signal from the MACD, with the MACD line recently crossing above its signal line and the histogram turning positive. RSI is neutral at 55.55, indicating no immediate overbought or oversold conditions, leaving room for movement. However, stochastics are rising and approaching overbought territory, suggesting the current bounce might lose steam. Key resistance for AMSC lies near the upper Bollinger Band around 55.29 and then the previous highs around 58 to 60. On the downside, the middle Bollinger Band at 51.05 acts as immediate support, followed by the lower band at 46.80. Volume during this recent rebound has been relatively subdued, so conviction needs to build for a sustained move higher. Finally, let's discuss the recent news surrounding American Superconductor, or AMSC, which helps explain some of its past and potentially future movements. According to an article from The Motley Fool, AMSC rocketed higher due to two significant catalysts: a new multi-million-dollar commercial wind energy order from Inox Wind and a $3.5 million research grant from the Department of Energy for superconductor cable development. This news, though dated July 31, 2025, highlights the company's strong positioning in renewable energy and advanced materials. These developments provide substantial revenue streams and R&D support, significantly bolstering AMSC's long-term growth prospects. The market reacted very positively to these announcements, demonstrating investor optimism in the company's innovative technologies and market expansion. Moving forward, continued progress on these projects and securing additional contracts will be crucial for American Superconductor to maintain its upward momentum and potentially overcome broader market headwinds. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.